Hey everyone, Ford stock is up 96% over the last 3 years. Now, Ford is not a company that grows revenue or profitability all that quickly over the last few decades. And certainly, it's not one that has a stock price that increases like this over several years or more. So, what's been going on at Ford lately that's driving these kinds of gains for the stock price? Well, a lot of factors are working in its favor. The supply chain shortages certainly are one that worked in its favor because industry wide, limited supplies allowed car dealerships and car companies to sell the highest priced models, manufacture only the most profitable models, and thereby drive excellent profit margins on the cars that they're selling. Now, this may not last long term, but for now, things are looking great. So I wanted to take a look at Ford's most recent conference call to get a closer look inside the company, what's going on with Ford stock from the CEO himself, James Farley, in this commentary he gave following the company's latest quarterly earnings update. So starting with, of course, the biggest thing going on, which is the transition to EVs. And clearly the CEO says the transition to EVs is dynamic and so much more than just a change in propulsion. The number of global entrants is increasing even at the high end, and the pricing pressure has dramatically increased in the past 60 days. Now, if you're not already aware, car companies, EV companies worldwide have been slashing prices in competition with each other. You can argue Tesla started this price war by slashing prices several times and then competitors followed. That is, irrelevant who started it. What matters right now is that they are in the middle of a price war, EV companies worldwide, right? That's not the case for other legacy car companies, you could say. They're not competing on price as much as EV companies are. And part of the reason EV companies are competing so much on price is because of what the CEO mentions here is there's been such an increase in supply. So many new car companies entered, even existing car companies adding new models, that there's just so much supply on the market now that prices need to come down to clear that supply, to clear that capacity that exists in the market. Now, governments are trying to help, offering massive incentives for consumers to go out and buy these cars, but there just isn't that organic demand for electric vehicles. It just doesn't exist all that much. If you think about it, worldwide EV sales are less than 10% still of overall sales, and that's with all this massive government incentive on the consumer side and on the supply side to try and bolster this industry. But the organic demand from consumers is just not there to support all of this supply that's come online, right? And so that's been a factor in the EV side, and Ford, like many others, is losing a lot of money in that segment, in its EV segment. But Ford's not the only one. You can say that maybe Tesla and a couple of other Chinese EV companies are the only few that are profitable at scale in EVs right now. So, supply chain disruptions are persistent, but they're now easing. So the company's supply chain issues are easing. The company did increase production by about 7 or 8% in its most recent quarter. I suspect it could increase supply more if it wanted to, but at this point, Ford is saying, why would we? Right? If you've been paying attention, their sales have been growing by double digits. Profits have been explosive. So Ford is not in a hurry to ramp up production and get back in that scenario where when you go into a dealership, you're getting huge discounts to buy new cars, where right now you're having to pay premium prices above sticker price to buy new cars. Ford and others like where they're at, right? So they're not in a hurry to go back to ramping up production the way they were before the outbreak. So Ford expects the EV market to remain volatile until the winners and losers shake out. Now this could take some time because If you recall, in 2020 and 2021, investing in electric vehicle companies was extremely popular. And so what does that mean for the industry? That means the industry attracted billions of dollars of capital from investors worldwide. So they're well capitalized. It's going to take them a long time to lose enough money to say, okay, you know what, we give up, right? They're going to need to lose so much money over such a long period of time before some of these newer EV companies throw in the towel and say, okay, we give up, because they got so much money during the pandemic that they've got billions on their balance sheet, and so they can go on and on and on, losing money, selling cars at a loss before they actually say, okay, you know what, we give up. And until they do that, the industry is going to be volatile, the industry is going to experience price wars, and it's going to be difficult to generate profits. But thankfully for Ford, they have the flexibility to offer customers a choice of ICE engines, internal combustion, hybrids, or full electric models in the years to come. And this is what's helping Ford right now, is the sale of ICE and hybrids, which have been incredibly profitable for the company, even though the full electric segment for them has been generating losses. So they've been able to generate billions in profits and cash flow from that side of the business to fuel their investments in EVs. And so for EVs, they're starting a new retail model, going with non-negotiated price. And this, I think, is a smart move. They observed in the market, companies like CarMax having success with that non-negotiated price. I don't think anybody enjoyed going to a dealership on a Saturday or Sunday trying to buy a car and having to spend hours negotiating the price with the salesman at the dealership, right? I think the market has shown that people prefer seeing the price and paying the price for the car and not having to haggle with dealerships. And so Ford is smartly observing what consumers liked, and they're adopting that model, going with that non-negotiated, simple shopping and ownership experience with remote services for all of our customers. And so I think that's a smart move, and I think that says a lot about dealerships. I think dealerships have been ineffective in serving consumers. I think they have been effective in milking every last penny out of every sale that they can, because they sit a customer down and they try to find out exactly where this customer is on the demand curve and how much they can get out of this customer, and getting the most out of each customer that walks into a dealership. However, as you might imagine, that's not very friendly to customers, and customers have been jumping ship as soon as they find another option where they can buy a car without having to go through that process. So I think it's a smart move for Ford to slowly move away from that model as they can. They might be tied into some long-running agreements, but as soon as they can step away from that model, I think it'll be helpful to the business. But that's all I've got for this video. I hope that's shed some light as to what's going on with Ford and why the stock has been up so much in the last few years. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.